taking a look at some of the top trading systems that are working now and in the past. Tricky market environment. Typically, we trade the Cobra 3 E-mini S&P as our long-term favorite stock index trading system, and it still is. We've been in a drawdown. We're taking a look for a repeat of last fall from the beginning of September to the end of January, $11,500 run with $25 slippage and commission. And so we're looking for another run like that. It's been a challenging year, lots of chop, and so, but a great system. And we apply this exact same system on 15-minute charts. We're at equity peaks. Told you about this a while back. We were in this little bit of a drawdown. Said it was a good time to get in, and we're at equity peaks. Caught that little bit of that move yesterday. Day trade strategy can only do so much when there's a gap up. Jobs numbers push that up, and you see a lot of the trend. A lot of times the trend in a bull market is a gap up. You see this move was a gap up, that move was a gap up, and so you see some of the recent trades in that. The swing trade version, actually we don't have a swing trade version of this, but we have a swing trade version of the next one I'm going to show you. But this is Cobra 3, 1 and 15 minutes. See, the 1 minute are at equity peaks as well, so the 1 and 15 minute are at equity peaks, while the 5 minute is in the drawdown. And so this is a strategy that works on many different time frames. If you look at the long history of this back at the beginning of the E-mini S&P, there's good results. And so these are the strategies that we recommend, Cobra 3. And then we also recommend the stock index swing. And there's a day trade version of this. And so most of you may want to trade a day trade version. When volatility and VIX are high, day trade is the way to go. When volatility is low and VIX is low, swing trading is something to do, something to consider, because a lot of times the moves may not happen during the day, and you need to hold them overnight to get that continued follow through with low VIX. But we're at equity peaks with this day trade system. Back to 1997, high average trade profit, and this is inclusive of slippage and commission. You see there's $25 round turn taken out, $12.50 per side, and so it's $97 round turn and before slippage and commission. So see some of the recent trades. Captured this long trade, this long trade, this long trade, this long trade, and lost on this short trade, lost on these long trades. But we're at equity peaks, and the swing trade version, which I'm going to show you next, captured some bigger moves. So if you look at the aggressive swing trade version, probably one of the first things you'll notice is the Brexit trade. No way you would want to hold that overnight knowing what was going to happen. We were almost at our profit target. Go ahead and take that profit target in those situations. In extreme news events, you go ahead and take that profit target, and you miss this trade. But even if you do take that trade, this strategy is still at equity peaks. And so if you look, going back to 1997, beginning of S&P, E-mini S&P trading, swing trading as bigger drawdowns. And like I said, one of the things you could potentially do is to swing trade in low VIX and day trade in high VIX. Sometimes I need to test, make this, have the day trade version, the swing trade version, go back and test that and see if we can come up with the exact numbers for the best way to do that. But for now, you see we're at equity peaks on this, and here was the drawdown based on that Brexit. It's not even the biggest drawdown. You've had much bigger drawdowns, and so you have to be willing to take these risks and be okay with overnight risk to trade swing trade, especially during news events. But sometimes the news will hit the market and no one expects it, and you get the same thing, so you don't always know when that's going to happen. But these were some really nice trades. This is an example. We don't hold stop losses or profit targets overnight, so you get some bigger winners as well as bigger losers when you do that. Another consideration is to use stops at night, but not profit targets, so you limit your loss, and then you could potentially maximize your gains. And so those are some additional things that are on our list to research for this strategy. So you see lots of winners since that big loss, with the most recent one, this loss right here. Yesterday, gap up on the jobs report. So the day trade version, the swing trade version, and the Cobra 3 are the strategies that we recommend for the E-mini S&P and stock indexes in general. There's two other strategies I want to show you. There's the aggressive swing soybean strategy. It's at equity peaks. Here's what it's done since March. So this thing is taken off. We have the day trade version that we recommend, and then we have a swing trade version that we recommend. It's actually a different system. The Soybeans Day Trader 3 is a different system, and you see that here. And soybeans started trading electronically on August the 1st, 2006, and we're in a little bit of a drawdown. We haven't had an equity peak since, I guess, December or January, and we pull back, and then we're moving higher towards that equity peak. And so highly recommend this system, as well as if you want to trade the swing trade version, you get bigger average trade profits, you can catch bigger moves, you also have the overnight risks, and you could be on the wrong side of a limit move or the right side of a limit move. I'm going to show you this back to August 1st, 2006. So here we are, $112 average trade profit with slippage and commission. Here is the performance graph. You're not always at equity peaks. This was a nice run here. And this one tests well back to the 80s, the 1980s. We have that on our website where we test this swing strategy on pit data. From August the 1st, 2006, we tested on electronic, and prior to August the 1st, 2006, we tested on pit data because that's the transition date. And so this thing has nice potential for nice runs. And there's a conservative and an aggressive version, and we're just looking at the aggressive version right now. And one more strategy I want to show you that's non-stock index swing. I showed you the stock index swing strategies for the E-mini S&P, showed you soybeans, and now I'm going to show you gold. So here's gold spike 2, and this strategy has not done well in recent years, but this year is really doing well, knocking it out of the park really. Average trade profit over $200, 36.25 drawdown. And so it's got a knack for this. It gets out and gets back in, and you see originally it stopped out, but then it got back in and caught this nice move. It's a counter trend strategy, and gold's very counter trend in nature, and so gold spike 2 is one that we recommend. You know, gold can be volatile. Gold can have some big movements. You see this drawdown is pretty low for gold. You can have some bigger drawdowns in gold, so be well capitalized to trade gold. Oh yeah, I want to show you, I have this Ninja Trader stock index swing, and Ninja Trader captured this move on the day trade version yesterday. The TradeStation version didn't capture this. The NYSE tick is used in this, and it's different between different platforms, so you're going to get slightly different results between CQG, Kinetic, TradeStation, any data feed you use. The tick, NYSE tick, is going to be a little different, so you might get different results based on that data feed. And so nice trade yesterday in Ninja Trader on the stock index swing day trade version. So that's what I have for today, what I have going into the, we're going into the second half of the year. We already started 9 days in, I guess, July the 9th. And those are some strategies to take a look at that are in our portfolios and that we recommend. And let me know if you have any questions.